Welcome back. You're watching Real Estate. As the steam in India's much touted financial capital and the national capital region starts to cool off, we tell you how small pockets in metro cities like Whitefield in Bangalore, Gachibowli in Hyderabad and Viman Nagar in Pune are fast catching up. Experts believe that these cities are likely to generate returns anywhere between 50 to 20%. Sapna Dhanwani takes you through the top 5 cities that you should consider before making that investment.
Mumbai, Navi Mumbai, Delhi, Noida, Gurgaon. These cities have expanded and grown beyond imagination. You might be a little sad that you didn't make the move when the development was at its peak, but you will be glad to know you haven't missed the chance altogether, since lesser famous places are now exceeding expectations. This new year has enough and more options that you could choose from to make your investment. To talk about places that have delivered attractive returns in the year gone by, Whitefield in Bangalore and Viman Nagar in Pune will definitely top that chart. The lesser-known places, Gachibowli in Hyderabad and Rajarhat located in southern Kolkata, are also providing tough competition to the well-established corridors of Mumbai and NCR. According to a latest JLL report, Whitefield in Bangalore has surprised investors and developers alike. Fast developing infrastructure across the IT city has gotten NRIs in its favor. Whitefield is located about 20 kilometers from the city. A slew of residential activity as well as the number of malls that have come up in this region is bringing all the action from the much flaunted Brigade and MG Road. A proximity to IT parks and MNCs makes this place a haven for engineers and CEOs alike. According to the same report, prices in this region are likely to escalate 15% in the next 12 months. Close enough are the southern suburbs of Chennai. This includes places like Old Mahabalipuram Road and the East Coast Road. Prices in the OMR Road have already shot up by 55%, according to data from research firm IndiaProperty.com. JLL expects prices in this region to further escalate by an additional 8 to 10% by the end of 2014. The consensus largely remains that South Indian markets are likely to perform better in 2014 and Chennai is going to be the jewel in that crown. Pune, that has traditionally been a holiday home favourite, is now fast catching eyeballs. The place has seen a firm NRI and HNI interest. Experts believe Viman Nagar and Nagar Road are likely to see a price jump of 5 to 8% in the coming year. Remember, prices in this region have gone up by 65% in the last 4 years. With the coming in of the international airport and better connectivity to the financial hub, end users are now looking at Pune seriously. Moving back down south, Gachibowli in Hyderabad is likely to be an area of your interest if you are looking to make hay while the sun shines. The quiet southern city has seen capital values appreciate by almost 45% in the last 4 years. Gachibowli, located about 22 kilometers northwest of Hyderabad, is likely to see a price appreciation of 15 to 20% according to JLL's Emerging Investments Hotspot report. Rajarhat or New Town is a planned township located only about 8 kilometers from the airport. Rajarhat has been divided into 3 areas, one mainly consisting of malls, the second will be a sub-CBD and the third one is the planned residential town. The place is a little far from main Kolkata and connectivity remains a major issue. But Rajarhat is a stone's throw away from the classy Salt Lake City. Several IT majors have set up base while others like TCS and Wipro are likely to start operations soon. This place is going to be a hit with corporate and IT biggies as it ensures that you don't have to enter the cramped roads of Kolkata if you are there for business purpose. Real estate companies like DLF, Unitech, Shapoorji Pallonji, Singapore-based Keppel Land, Ambuja Realty are developing commercial, retail and residential projects in Rajarhat. The area is likely to see residential prices appreciate by over 10% in the next 1 year.
So that was all about what the country has to offer. But if you're looking for a home away from the motherland, then there are enough and more opportunities abroad. The luxury spells some of these world-class cities will cast is surely difficult to resist. Sapna Dhanwani takes you house hunting to the top 5 cities around the globe.
If you're not convinced of the Indian real estate boom in this brand new year, then looking overseas could be the best option. While it will cost you almost the double and sometimes triple, the returns will make sure you forget the pain. If luxury, extravagance and indulgence is something on top of your list for a home, then the grass is definitely greener outside the home country. The top 5 cities, according to Knight Frank's Global Prime Index, are cities like Jakarta, Dubai and Shanghai that have provided an average return of 20% in the last 12 months. It's imperative to note 4 out of 5 of these top investment destinations lie in Asia. Starting with Jakarta on top, Dubai ranking second, followed by Shanghai and St. Petersburg in Russia. While Dubai and Shanghai have traditionally been all-time favorites, Jakarta has emerged as a star as far as global investment destinations in 2013 are concerned. The Indonesian capital, located on the northwest coast of Java, is the country's economic, cultural and political center. The residential property prices in this region have shot up by 28% in the last 1 year, according to data from Knight Frank. The city has outperformed well-established peers such as Kuala Lumpur, Shanghai and Bangkok. The secret to Jakarta's quick growth is none other than the government's well-thought expenditure plan. Also, the country has emerged as a major trading hub for textile, automobile and manufacturing in the South Asian region. A spacious 3 BHK home in Jakarta will cost you nothing less than 7 crore rupees. The most famous and talked about city, Dubai, has seen prices escalate as much as 20% in the last 1 year. The city has emerged a phoenix after the 2008 shocker. Claimed for years that Dubai is a shopper's paradise is proven beyond reasonable doubts. Now, even for those who are looking for that luxury home dose. Spoiled for choice is an understatement, as this city personifies luxury. If that doesn't attract you enough, an average 20 to 25% return on your investment within a year definitely will. As the city will now host the Expo 2020, the returns are not only assured, they might just surprise you on the upside. 3 BHKs in Dubai demand nearly 8 to 15 crore rupees. Shanghai, one of the most resilient real estate markets, has seen prices shoot up by 18% in the last 12 months. A 3 BHK here is likely to cost you anywhere between 20 to 30 crore rupees. The Chinese heart has always been an evergreen investment hotspot as far as Asia is concerned. The steam continues in Shanghai and investors still can't get enough. According to a report published jointly by PricewaterhouseCoopers and US research organization, the Urban Land Institute, Shanghai ranked second out of 23 Asian countries in terms of investment prospects. Experts believe that Shanghai offers a level of comfort to newly arrived home buyers and funds with a mandate to place money. Moving on, St. Petersburg in Russia has also stood strong as far as capital value appreciation is concerned. The residential property prices in the city have impressed investors and fund managers with a 15% return on their investments in the last 12 months. The Russian city is a major trade gateway, financial and industrial center of Russia, specializing in oil and gas trade. A 3 BHK in St. Petersburg is likely to cost you anywhere between 25 to 35 crores. Lastly, an address known all over the world, New York, has seen prices appreciate by 14% in the last 1 year. Data according to consulting firm Knight Frank shows that New York is likely to remain a steady growth market, providing returns of 14 to 16% going forward. While the affordability has gone for a toss in this swanky American locality, it continues to stay on every luxury home buyer's mind. The tag for a basic home in New York is 60 crore rupees.
Alright, it's time for a short break. To get our expert opinion on your property matters, feel free to call us or email us. Details coming up on the screen. On the other side, we discuss the outlook of the real estate sector in 2014 with Sanjay Dutt, the executive of South Asia with Cushman & Wakefield. More on that in just a bit. Keep watching.
Okay, the property sector in India may be struggling to attract buyers and get rid of soaring inventories, but money flowing into the sector seems to have posted an increase. Reports show that nearly $5 billion came into the sector in 2014, a jump of over 140% compared to 2013. What could be behind this inflow of capital? Nikhil Narayan Shivadas has this report.
Low sales, high debt and soaring inventory. Three factors adding to the overall gloom and doom in India's real estate sector. But it's not bad news all the way. A report from Cushman & Wakefield indicates that investor sentiment in the sector has improved thanks to the Narendra Modi government's actions.
The finance minister also reached out saying one simple message that this country is going to be very investor friendly, very corporate friendly, and therefore we encourage you to come and make in India, and we encourage you to invest in India.
This may be why investments into India's real estate sector are soaring. At a time when global real estate investments have fallen by nearly 6% to $1.2 trillion, Indian real estate investments have increased to $5 billion in 2014, an increase of 140% over 2013 and the highest level reached in the past 5 years. The majority of these funds flew into the residential sector, which received nearly $2.6 billion. The infusion has provided much needed relief for real estate developers who have been using the investment to cut down on debt, fund new acquisitions, and most importantly, use it for construction finance to finish stalled projects in anticipation of a pickup in demand next year.
Bulk of this money is going towards the construction of the projects, completion of the project. The focus of the developers is not now to take new projects on hand, but to make sure that the completion of the project happens before they move on to the next one.
Positive sentiment about India's economic growth has seen investments in the office spaces market rise, with corporates taking steps to expand their footprint in the country. Corporate investments in the sector touched $2.5 billion in 2014, compared to just $900 million in 2013, with private equity firms and sovereign funds leading the way in acquiring quality commercial assets.
What we have seen at Marathon, particularly for all our commercial projects, from 14 onwards, there is a sudden pickup in the office space demand. Surprisingly, corporates are coming up for buying more rather than leasing.
Renewed optimism about the economy is not the only reason why investments in the Indian real estate sector are at a 5-year high. Experts say there's also a sense among investors that valuations here cannot be any cheaper, and with sentiment improving, there's a rush by investors to take advantage of low valuations before it increases.
Because the sector was really reeling under the, it was cash starved for last 2-3 years. So therefore the valuations are at very low points right now. So investors are getting very good valuations to enter into projects.
The real estate slump has forced developers to project the right product at the right price in the right market. Add to this the rise in investments and improved economic sentiment, and experts believe the real estate sector may be back on track in another year. From Mumbai, Nikhil Narayan Shivadas, NDTV.
Hey, it's Sasha Evdokov, and today I want to do a little discussion and share with you the difference between real estate investing versus investing in the stock market. Now, I find that a lot of people who are ingrained in their own investment vehicle, such as real estate or the stock market, really try and push that onto people, but that's not what I want to do. Me personally, as a disclaimer, I prefer business investing or the stock market, which is technically investing in businesses. Now, for you, you can choose to invest in real estate, which is what a lot of real estate people will push you to do, or you can choose a different investment vehicle. So that's what I want to recommend to you, is that you need to choose a vehicle that works for you. And how do you choose it? Well, it's based on which one can you stick with for the long haul, for the rest of your life. So choose one that you enjoy, that you can stick with for the rest of your life. And that can be either things like gold or rare and precious metals. It can be diamonds and so forth. It can be antique dolls. It can be antique cars. You can invest in stamps, commodities, all kinds of different things. But choose one that works for you, that you can stick with for the long haul. Doesn't matter which one, but learn it inside and out. Now, a lot of people that I've talked to that, said they had conversations with real estate investment gurus, they always say, hey, real estate is better. And then you talk to some stock traders and they say, hey, stock market is better. But they do have their advantages and disadvantages. And of course, the stock market hasn't been around as long as real estate or property investing. If you think of property investing, back when we had kings and queens, your wealth was kind of determined by the amount of land that you had, and hence why we had a lot of battles between countries and a lot of wars that broke out was due to the land, who owns the land and who owns the property, and this kind of showed a lot of the wealth. Now, if you invest in real estate nowadays, now you have renters and tenants, and you have these landlords, so things have become more complicated, but it's all based on property. So now in the modern world, you can still grow your investing from taking something from a lower asset value, holding it for a certain period of time, and taking more money out. That's what I think of investing, is putting money into something and then taking more money out after a certain period of time. Now, you can do that with real estate, you can do that with the stock market, you can do that by investing in gold, coins, or even stamps. But there are advantages and disadvantages to both. So if we talk about real estate and we talk about the stock market, one thing that I personally enjoy about the stock market is that you don't have to buy a full house. You can buy a part of a house. So for example, you can buy 100 shares or 10 shares of a company. Whereas when it comes to investing in a house, yes, you can buy a smaller house, but you can't get 2 rooms of a really nice house in a property or area that's booming. You would have to buy a $2 million home maybe in that area. So instead, in terms of the stock market, you can just buy 5 or 10 shares. You can buy 50 shares, 100 shares, 1,000 shares. It's really up to you. Obviously, you won't buy the full company, like you can't buy Google all the shares. It's just too costly for any one person to maintain. But with a house, you can get the full house if you want, but it's not as costly if you want to invest in the stock market. Whereas if you want to invest in a house, it's much more expensive. Now, the flexibility that also goes along with the stock market is quite great. For example, you don't have to be anywhere near the stock market. You can be somewhere in Alaska, you can be somewhere in Thailand and still trade and invest in the stock market. When it comes to investing in your real estate, you may need to then have a person that you know or a property manager watch over your investments. And this can take a toll on your profit. Otherwise, you'll have to be there personally and have a fixed location. And it's very tough to get rid of it. So if you want to sell and liquidate a house, it may take 3, 6, 8 months to get rid of a home. Whereas with a stock, it'll just take you a day or 2, or if it's the weekend, maybe a couple days, and you're out of your full position. So that's kind of some of the things that you need to think about when it comes to investing, is what are the advantages and disadvantages between these types of vehicles. Now, I'm not pressing one or the other because, for example, real estate on its own has some great advantages. You can continuously build equity if you have people that rent the home, and then you're building equity and eventually you can sell the asset. So it's kind of like building free equity. But of course, you need a little more startup capital. Well, in order to put your down payment, you may need to be there in location. So there are always advantages and disadvantages. But look at the different investment vehicles and see which one is right for you, because all of them have their advantages and disadvantages, and then make a choice accordingly. After you do that, stick with that investment vehicle, learn it inside and out, so that way you know what you can do, what you can't do, what are the prices, how do the prices move, how do the prices shift, how quickly is it to sell. and it comes down to really your lifestyle choices. I find that a lot of new investors, meaning new 35 and under, prefer to actually invest in things like the market or things that they can get in and out of quickly. More so because they don't want to be confined to a location if they get a different job or if they want to do or create a new business. Things have become more of a global economy. So I find that real estate confines the younger generation much more so. Whereas a lot of other people still like real estate investing. And real estate investing has become a huge investment strategy for a lot of billionaires in this world because it really comes down to property rights and you're owning something tangible. But I find that some of the newer investors prefer maybe the stock market just because for the flexibility behind it. Now, I always recommend having something physical. So even if you're trading or investing in the market, always transform it into some physical, tangible asset eventually, whether that's gold, whether that's commodities of some sort, diamonds, precious metals, whatever it is, or even real estate. Of course, unfortunately, then it's a lot tougher to sell it because it's less liquid, less easy to get in and out of. But think of these concepts. Don't be pressed by any one person which investment strategy is right for you. Make a choice, whether it's stamps, whether it's gold, whether it's commodities, diamonds, whatever investment strategy you want to go with that one. And do your research, do your due diligence, and then stick with it. Don't give up on it. Stick with it for many, many years. Because one of the worst things you can do is, get into investing into the stock market and then quit 2 years later, then get into real estate, quit 2 years later, get into antique cars and quit that as well. You'll just be bouncing in and out of all over the place, not really having a clear direction or a real focus into what you want to do. I'm Sasha Evdokov. Thanks for watching this video. I hope you enjoyed it and I hope it made you think a little bit about your investment process and where you want to go with your investments for your future. If you want to check out some of my courses regarding the stock market, then go ahead and check them out at tradersfly.com. Thanks again, and I look forward to seeing you next time. And don't forget to do what you love, contribute to others, and most importantly, live life abundantly. See you next time.